Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model Daily Briefing for Wednesday the 15th of the 9th, 2021. Time is just gone 0440, 20 to 5 in the morning GMT. Asian session coming to a close, European session firing up, our lunchtime North American session. Right, yesterday Tuesday the 14th we had a positive opposed driver in the yen at plus 140. Front and back door flows mainly coming out the pound at minus 117, out the euro at minus 32, and the dollar was the positive rock at plus 9. Activity plus or minus 149. Intra-week then, this is from Monday the 13th out to about 15 minutes ago. We've got a negative opposed driver in the pound, minus 165. Front and back door flows mainly going into the yen at plus 167, into the dollar at plus 22. And the euro was the negative rock at minus 24, activity plus or minus 189. So yesterday we had a weak pound, a strong dollar driving, a strong yen, get it right, strong yen driving the market at plus 140 with funds coming out the pound, out the euro. And over the week we've had a weaker pound, so you can see that the pound's dropping through the gears. Basically it was the negative secondary driver yesterday, and on a weekly basis it's the negative opposed driver, and as we come into the Asian session it's the unopposed negative driver. So Asian session, this is today, open from about 15 minutes ago. We've got a negative unopposed driver in the pound at minus 39, no backdoor flows, mainly going into the yen at plus 26, into the euro at plus 11, and the dollar was the positive rock at plus 2, activity plus or minus 39. So as we can see that the pound is dropping through the gears. It's weakening, right, which is what we thought, but it didn't really behave that nicely for us yesterday. Right, we'll stop it there and write up the flow. Right, back again, we've written up the flows then. So the euro is strong except against the yen and the Swiss, which is stronger. The yen is strong except against the Swiss. The pound is weak except against the NZD. The Swiss is strong across the board. The CAD is weak except against the pound, the AUD and the NZD. The AUD is weak except against the pound and the NZD. The NZD is weak across the board, and the dollar is weak except against the pound, the AUD and the NZD. So what have we got? We've got Swiss strength across the board, New Zealand weakness, and the secondary ones are the yen. So because it's strong except against the Swiss, so the yen, and the pound is basically weak except against the New Zealand dollar. So they're the secondary ones. Right, so what's going to knock it about, or has knocked it about? We've had soft China retail sales. We've got GBP CPI inflation data, and we've got CAD CPI. So we've got two lots of tier 1 inflation data coming out later today, and we've had soft China retail sales, and we also had a little bit of soft claimant counts in the GBP yesterday. So that's where we are. We'll stop it there and write up the asset classes and do the final analysis. Right, we're back. We've written up the asset classes. So US dollar index is 0.33 from the high, so it's come off about a third, but it's coming back up, so it's mixed there. Gold is 0.48 from the high, so it's just above half marks, thinking about going up. Oil is 0.40 from the high, so gold's had that pump which we thought it might do, so oil's had that pump which we thought it might do. Wall Street, S&P and tech have all come off their highs, 40% off Wall Street, 33% off the S&P and 22% off the model high off the tech. US 10-year then, this is the price, remember, so the price has been chunking up, so that's 0.29 from the high, so it's 29% from the high, so the price has been chunking up. Yields have been coming off a bit in the US, whereas in the bund we're at 0.42 from the floor, but we're at 0.29 from the high in the US. So relatively speaking, European yields are starting to play catch up now with US yields. So we're seeing a bit of strength in the bund. Right, copper. Copper's at half marks, 0.5. It's been trading up and down like a yo-yo, pretty range bound. And US steel is 0.42 from the floor. It's 42% off the floor. Soft, but heavily range bound as well. Right, get rid of that then. Let's make the final analysis then. So, so we've got some inflation data coming out today, which will knock the GBP about. And probably what's the other one? It's the CAD. We've also got this. We've got we've got the flows. So the Asian session is showing us New Zealand dollar is the weakest across the board, and the Swiss is the strongest across the board, and the second weakest is the pound, so minus the NZD, which is the weaker, and the yen is the second strongest. So that's what the flows are telling us. And what is that telling us in reality? Well, it's telling us we've had this sort of China retail sales disappointment, a fall in the NZD, a rise in the Swiss, a rise in the yen, and a fall off in the pound. Is looking sort of like defensive risk off sort of scenario, and you've got the dollar, the euro, the pound, the yen and the pound. We've got pound data in play. We've got CPI, and we've had soft claimant counts. So the pound in the flows is likely to carry on going south. Obviously, it's data noise dependent. If you get a massive whack up in the CPI, then the pound will charge up. So that's where we are. The bund is showing signs of perkiness there. So and the dollar has had a little recovery from its poor data yesterday. So and equities have come off a bit. So if you want to trade the flows, you want to be short the New Zealand, long the Swiss, short the pound, and long the yen. And watch out for the noise. So that's where you want to be. So I hope that was useful. Thank you for watching. See you tomorrow for the daily briefing. Thank you.